Today we have Sean McKay, who is the Vice President in charge of Business Development from American IRA, to present the Basics to Advanced course for investing in alternative assets inside of a truly self-directed IRA. It's a pleasure here to have Sean with us. Sean, come on up, would you please?
All right, welcome everybody. This is Taking Your IRA and 401k Beyond the Stock Market. I'm Sean McKay, the Vice President of Business Development for American IRA, and today we're going to cover the basics of what a self-directed IRA is and what you can do with that account. So first of all, we want to make sure you have our information handy. So if you want to give us a call at the office number is 828-257-4949. Or if you'd like to email me directly, my email address is Sean, S-E-A-N, @AmericanIRA.com. And our website is www.americanira.com. So that's kind of the basics of our information, how to contact us. For many of the people in the Southeast, we are the local provider of self-directed retirement accounts, and certainly we do have account holders all over the nation. So nowadays, certainly the first thing we want to do is make sure that we have that trusty disclaimer. We want to make sure that you understand that we are the administrator for your self-directed retirement account. And what that means is that we do the record keeping associated with your IRA or 401k or tax-deferred account. So we are not the financial advisor, we're not your CPA, we're not your attorney. Please feel free to speak with those professionals when making an investment. This is for educational purposes, so hopefully we'll be able to expand your knowledge of the retirement accounts. So certainly the first thing we should do is to define what a self-directed retirement account is. I think sometimes that there is a misconception out there that to have an IRA or 401k means that you can only invest in securities-based assets. And for many of us, that's the stocks and the bonds and the mutual funds. And that's certainly a component of the things that you can invest in with your retirement account. That is certainly not a full list, though. So we're going to delve into some of the different things that our clients are currently investing in. A lot of exciting concepts out there, and you'll be able to see what makes sense for you and for your portfolio. So when we say a self-directed IRA, we want to make sure that we have a few concepts down pat. The first one being that a self-directed IRA is a retirement account that you as the account holder are making all of the decisions. You are picking the assets, you are doing the due diligence, you are the captain of the ship. Think of us as the robot that does what you tell us to do. We sign the documents you tell us to sign, we send the funds where you tell us to send them. Certainly we do everything in our power to educate you on the different options available, but at the end of the day, as the account holder, it is up to you to make sure that you're investing in what you know and what you believe in. The second concept is that when we say a self-directed IRA, some of us are familiar with that in the securities world. We're able to pick our own stocks, and that is self-directed to a degree, but that's not necessarily a fully self-directed account. We could call that a partially self-directed account, if you will. A truly self-directed retirement account can invest in a plethora of assets outside of stocks, bonds, and mutual funds. We have clients that invest in notes. We have clients that invest in real estate, precious metals such as gold and silver, private placements. That's actually the ability to invest in privately held companies as opposed to the Fortune 500 companies and those larger institutions. There's a lot of flexibility out there, and we're certainly going to touch on some of the more popular assets as we go through this presentation. But we want to make sure we understand the baseline, that a self-directed IRA is the exact same retirement account that you currently have. The only thing that is changing with us as the administrator is your ability to invest outside of stocks and bonds. You can certainly invest in stocks and bonds with us. We do have that capability to be able to administer those sorts of assets for you as well. But it's a larger base. It's really opening your world, the freedom to invest in what you know and what you believe in. So who is American IRA? American IRA was actually founded by our CEO, Jim Hitt, in 2004. So we've been around for a few years now. We're located in Asheville, North Carolina. That's where Jim Hitt set up the first office. And Mr. Hitt, as well as his team at American IRA, has grown the company to well over $250 million in total assets. So certainly we're not some of the larger institutions such as Bank of America in total assets, but we're a pretty substantial institution, and we administer quite a large portfolio of accounts for our client base. So The accounts, as they always are with any institution, the accounts are FDIC insured. So what that means is cash that is held in your IRA or 401k is FDIC insured, just as it would be with any financial institution. The common theme throughout this presentation is that your retirement account isn't changing in any way, shape, or form. The only thing that's changing is your ability to invest in other assets. So the traditional IRA that you have, simply a self-directed traditional IRA, same rules and regulations you've always had to follow. Mr. Hitt, as I said, the CEO and the founder of American IRA, he's really about the most knowledgeable source you could have in the self-directed world in terms of the ownership. And I mention that primarily because we want you to understand that certainly our role is to administer the accounts, and we do that in an efficient manner, but we also want you to understand that we understand the assets that you might be investing in, whether it's things like precious metals, private placements, real estate, private lending, things of that nature. These are all things that our owner has done. And so it's important to understand that we grasp the concepts. We're investors ourselves. And I think that it's much easier for our account holders, our clients, to be able to communicate with us about their investments, knowing that we understand what they're accomplishing and what they're purchasing. So I think that's a nice marriage of understanding how to efficiently run and administer the self-directed accounts, and also adding that level of expertise in the investment world. So as employees, we're very lucky to have someone who's so well versed in the investment world, and it helps us to serve the clients better. So the question I get asked on a daily basis really is, why haven't I heard about these self-directed retirement accounts? Why haven't I heard that I can do things outside of stocks and bonds with my IRA or 401k? And the reality is that certainly still at this point in time, the majority of the total retirement assets in our nation are held by institutions like the banks and financial advisors. And certainly if you're looking to invest in CDs and money markets, or possibly have a financial advisor pick some stocks or bonds for you, that might be the best option. But the reality is, as we said, that's certainly not the full plate of options available to you. And we need to understand that when you have those sources that are administering your retirement account, there are a certain number of assets that they can help you to invest with, such as the CDs, the money markets, things of that nature. If you're looking to do something a little bit outside of that realm, such as this real estate, for example, if you go to your financial advisor and say, I'd like to purchase a single-family house, they might not be familiar with that concept. They might not even know that you can actually do that with your IRA or 401k. They're certainly not set up to do that paperwork-wise. It's a lot more paperwork intensive for us to administer that as opposed to purchasing 100 shares of ABC stock, whatever it may be. So it's not that they're trying to be misleading in any way. We just need to understand that that's not where they shine. They're not best with what we call the non-traditional assets. So when you're wanting to deal in that world, if you're sick of the stocks and the bonds and the roller coaster ride of that crazy game, then certainly we are really going to be the best fit for you in that world. So it's important to understand they have their place in the financial world, if you will, and we certainly have our niche that we're very efficient at processing those accounts for you. So why do I need a retirement account? Certainly in previous generations, the economic climate was a bit different than it is today. I certainly consider myself an optimistic person, but I think we also need to take stock of where we are and where our economy is and where it's going in the future. And the reality is for many of us in these current generations, we're not necessarily going to get those pension plans that previous generations had. The previous generations, you'd work for a company for 30, 40 years, you'd retire, and you'd get this tremendous pension plan, you'd be able to travel, you'd go out there and see the world, spend a lot of time with your friends and family, and that was a tremendous lifestyle. Certainly one that I hope to have in my retirement life, but we need to be a bit more proactive because a lot of us are not going to stay with that same company for 20, 30, or 40 years. So it's very important that we understand that the pension plans might not be part of that end result of getting to retirement, so we need to be more proactive with it. Certainly when we're looking at things such as Social Security. I haven't met too many people these days that are thinking that they're going to work their job, they'll be able to spend the income that they make from that job, and Social Security is just going to be able to take care of them fully in retirement. Hopefully it's even around for in the next few generations. You never know how that's going to go, but it's certainly not going to allow us to retire in style. And I don't think that any of us look at retirement as a situation where we're living in a cardboard box eating beans. We want to be able to do things, spend time with the people that we love. So we want to make sure that we can do that and maintain a quality of life that we've become accustomed to. Certainly inheritance. Boy, that's a great one if you can get it. Inheritance. I love the idea of someone in your family that said, boy, Sean was just a really great kid. He did things the right way, and when I pass along, I'm going to make sure that he gets a big fat check and $3 or $4 million, and he can do whatever he wants. Certainly, if that's your family situation, you might not need a retirement account, and maybe that's going to be the result for 0.5% of our population. But certainly for the large majority of us, as we can see, the pension plans, the Social Security, the inheritance, those things are not going to be what's going to get us to the place of being able to retire. So we need to be more proactive. We need to start retirement accounts. We need to contribute to them on an annual basis, and we need to grow them investing in things that we know and what we understand. We're not just going to invest in ABC stock just because our neighbor down the street has a hunch and he said, hey, I heard from another guy that that's a great thing to do. If they're driving down the street in a Maserati and they live in a $5 million mansion and they got $5 million in the bank, let's make sure we listen to that guy. But if he's in the same financial situation you're in, maybe we don't need to be listening to that guy. Maybe we need to take a little bit more control of our destiny. So is our plan working? Certainly that's the thing we need to look at. If your plan is working, as I said, if you're the guy in the Maserati with millions of dollars in the bank, please, by all means, keep doing what you're doing. Certainly I think that a lot of us look at our retirement accounts and we think that we could be doing a lot better. And unfortunately, I think that a lot of people will look at their situation and say, well, everybody lost money in the stock market. Well, as we said, pretty much all of us have lost money in the stock market over the last few years, and we're saying this as of September of 2011. The last few years have been rough, but as we said, that's not the be-all and end-all. Not everybody has their entire retirement portfolio in stocks and bonds. We need to make sure we understand there's a great big world out there for the investing. And when we look at stocks and bonds, I think there's a few things we need to keep in mind. The reality is that's a market in which there's not any ability to negotiate the purchase prices for those assets. If you're looking at stocks, do you have the ability to negotiate with the sellers of stocks and say, I know you're asking $20 a share, I would like to pay you $15 a share. The reality is if stocks are selling for $20 and you want that stock, you're going to be paying $20 for that stock. Now conversely, when we're looking at non-traditional assets, our clients have the ability to actually negotiate. Let's say it's a piece of real estate. We all know that real estate has had a downward trajectory in the last few years, but the reality is you can actually go to a seller of a piece of real estate, and if they're asking $60,000 for that house, it's very possible you're going to be able to get it for considerably less, whether that's $40,000, $50,000. That's certainly up to your ability to negotiate and how motivated that seller is. But we understand that there is the ability to get things at a discount with different sorts of assets. Certainly understanding the stock market and can we make money when it goes down. Certainly if you can read those stochastic charts and you have the MBA and you're tremendously knowledgeable about the stock market and you know how to make money in an upward or downward market, that is the asset for you. The important thing with a self-directed account is that this is all about you investing in what you know and what you believe in. Let's say, for example, I'm a real estate guy and I'm the employee of American IRA. Just because I like real estate doesn't mean that that's the best fit for you or for your portfolio. The service that we provide is freedom, the flexibility to invest in what you know. So if it's stocks, it's stocks. Let's just hope that you know stocks and that's why you're investing in it. You're not investing in it just because you feel like you got to follow the crowd. Lately, we've all been following the crowd off the cliff. So also looking at the diversification with stocks and bonds, it's important to understand that in previous generations and even up until recently, we've always heard diversification is you buy a few different kinds of stocks. Well, the people that I've talked to in the last couple of years that had that well-diversified portfolio, that still went in the tank when this whole stock market went down. So when we talk about diversification, it's important to understand it's completely different asset classes that will allow you to be truly diversified. So the definition of insanity, I don't want to beat this one down too much, but we need to make sure that if we're not getting the desired results from our portfolio, from the assets that we're investing in, we probably shouldn't continue to keep making those same mistakes over and over again. So certainly if you are looking for a change and you want to do things outside of stocks and bonds, we'd love to have a conversation and see if we could be of service to you. Very important to not make the same mistakes over and over again. Now, in terms of possible IRA investments, it would be almost impossible to create an entire list of all the things that you can invest in with your IRA or with your 401k. As I said, we're going to highlight some of the more important asset classes. I say important just because they're assets that the majority of our clients tend to invest in. Every day I'm surprised by a very creative investment that a client will come up with, and that's really the neat thing about this industry. I've been employed by this company for the past 3 years. I consider myself a student of investing. I have my economics degree, all of those great things, but there's always so much to learn from other individuals, and there's a lot of great things to do. So when we're looking at IRA investments, let's just take the real estate world, for example. Real estate is certainly an asset class that's a favorite of our clients, and in the real estate world, there's a lot of ways you can be involved with that. We have clients that actually like to purchase the physical assets, whether that's the raw land, condos, townhouses, single-family dwellings, or commercial buildings, apartment complexes, things of that nature. Your IRA or 401k can actually own that asset. In the stock world, your IRA is purchasing X amount of shares of XYZ stock. In the self-directed world, your IRA or 401k is actually going to purchase that piece of real estate and actually own that asset for your retirement account. So any type of real estate you can imagine can actually be purchased with your IRA or 401k. Mobile homes, certainly that's also something that our clients invest in. There's also clients that like the idea of real estate. They feel as though the hard assets, that's probably the play moving forward, but they don't necessarily want to deal with all the stuff that comes with being a landlord. Certainly that's the way that we've heard you create the true wealth, and for a lot of us that makes sense. For some of us, we have this larger pool of money in our retirement account. We want to be a bit more passive with it, and those clients will actually hold notes on property. Think of those clients as the individuals wanting to be the bank. So that certainly a lot of our clients will lend money, and it will be secured by something such as real estate or perhaps other assets. You can also do unsecured loans. Certainly you want to do your diligence on those situations, but it does give you the ability to invest in real estate in a more passive way, actually acting as the bank. Certainly you're going to come up with the terms and negotiate that out with the individuals you're lending money to. You can lend that out to individuals that are going to be buying a primary residence. You can also lend that to other investors that are actually looking to borrow money so that they can purchase more investment properties. So there's a lot of flexibility there, and we're going to go into some case studies down the road, but that's really the general aspects of the real estate world, is investing in the actual physical real estate or actually holding notes on those properties. As I said, we certainly have clients that will invest in things such as stocks, bonds, mutual funds. That's certainly available. Tax lien certificates, that's also becoming a favorite depending upon the state you live in. It might be tax liens, tax deeds that you can purchase at auction. Certainly there's a lot of states where you can get a great rate of return there. Private placements, as I said, that's actually the ability to invest with a privately held company as opposed to investing with some Fortune 500 company where you're never actually going to meet the board members of that company, the officers, the decision makers. If you're investing in a private placement, it might actually be an individual in your neck of the woods, somebody in your community that's either creating a new company and looking for an infusion of startup capital, or it might be an individual who's had a business for a while and they're actually looking to take that business to the next level. And that would mean that maybe they're actually looking for additional capital to take that business to that next level. So there's a lot of interesting things that can be done there. Certificates of deposit, tangible asset deeds, foreign sales, corporate stocks, accounts receivable financing, precious metals. As I said, precious metals, as of the middle and the end of 2011, a lot of our clients are purchasing gold and silver. For them, they feel as though that makes sense, having that hard asset in their portfolio. There's LPs and LLCs that individuals invest in, limited partnerships, limited liability companies. You can invest in somebody's entity that they've created for a plethora of different investments. We certainly see a good bit of that as well. Auto paper, that's, as I said, that's actually holding a note in this case on an automobile as opposed to on a property. Certainly if you go to a car dealership, there's going to be someone that's holding the paper if you're actually getting financing for that vehicle. So there's a lot of creative things that can be done there as well. Trust deeds, like and unlike exchanges, contract options. Certainly for those very seasoned investors, there's a lot of interesting things, a lot of creative financing that you can do and actually have your IRA be a part of those deals as well. We have those creative real estate entrepreneurs that'll buy options on properties, and they'll have an option period for X period of time, and that IRA can actually be the owner of the option to purchase that property. Lease options and owner financing, all of these great goodies that we have in the real estate world, your IRA can actually be involved with. So a lot of different things there. Commercial paper, commodity and option exchanges, commodities and futures, leases, joint ventures. Certainly a lot of IRA account holders will actually partner their retirement accounts with other retirement accounts or perhaps other individuals and go into a joint venture for some specific investment. And that's certainly something we see a good bit of and allows you to get into deals that otherwise you might not be able to get into. And factoring, that's certainly a very interesting concept, something that if you're savvy about factoring and the way the money moves and things of that nature, that can be a way to get a great rate of return. So as I said, this is not by any means a complete and exhaustive list. The way the IRS code is written is it actually tells you what you cannot invest in with your IRA or 401k. And we'll cover that in a few slides. But as I said, it would be almost impossible to tell you all the things that can be done. In a few slides, we'll go into what cannot be done with your IRA or 401k. Now, I want to make sure we understand, as we're looking at the different assets that are available and that our clients invest in, I want to make sure we understand American IRA's role. As we said, we are simply the administrators for the retirement accounts. And so what that means to you is, depending upon the type of investment that you make, you might have a lot of different members of your team. We are simply the record keeper. So if you're going to be purchasing precious metals, for example, you're going to want to pick your precious metals dealer and depository to actually store those items. So we want to make sure you understand we have a baseline role in these transactions. We are not doing the diligence as to whether this makes sense for your portfolio, and we're certainly not picking the additional vendors. We need to stay completely and totally neutral in all transactions. Certainly if it's something such as real estate, you perhaps might want to deal with a realtor. Certainly there's going to be other members of the team such as attorneys and things of that nature. Those are all going to be individuals and team members, if you will, that you are picking that you feel comfortable with. So we want to make sure you understand our role, what we can and cannot do. We cannot promote products for you. So let's just go into a really basic example. We want to make sure that you understand kind of the general flow of how an investment works with us at American IRA. So this first example we're going to call a private lending example. And so in this example, Jack Brown has $100,000 in a rollover IRA, sometimes called a traditional IRA, and wants to loan it to an investor as a first mortgage on a $135,000 investment home. Now, he knows that that's $135 because he's either done the diligence or he's had other team members such as realtors or other investors helping him out to decipher what that property is actually worth. So if you look at this, Jack Brown has $100,000 and he's going to loan it on a property worth $135,000. And so what that means is that is a 75% LTV loan to value. He's loaning 75% of what that house is currently worth. Now, certainly whenever you're doing private lending, let's say you decide you're going to be a bit more passive and do the private lending, we're not saying that you should only lend at 75% of the value. Certainly if you know the individuals you're lending the money to and you feel much more comfortable with a higher loan to value, loaning money at much closer to what the property is actually worth, that's your prerogative. As I said, we are completely neutral. If you only want to lend it at 50% loan to value, certainly that's your decision as well. We're just giving you a really general example of a cookie cutter deal that we see coming through our office on a daily basis. So this is by no means the template that everyone should have to use for their investment strategy. In this example, Jack Brown is going to make 9.5% interest on his money. As we said, Jack Brown is acting as the bank, and the rate of return he's going to get, in this case on a monthly basis, is going to be 9.5% on his money. Once again, he picked those terms. Him as well as the investor, they came to an agreement and they negotiated out those terms. Please don't call our office and say, please give me even parameters, because there's such a wide range. We have clients that will lend anywhere from 4% to 25%. It really depends upon you and your situation and what you're trying to accomplish. In this situation, it's interest-only payments with a balloon in 5 years. And that simply means that the loan is not going to be amortized. Most of us are used to having a loan in which we're paying down principal, paying down the note of what we owe. It's just going to be interest-only. And a balloon payment means just simply in 5 years, that is when the investor is going to need to actually pay off the note with this investor. Now, in terms of what we need paperwork-wise at American IRA, Jack is going to complete what we call a bi-direction letter for the new note. And that is just a real basic form that we have. Certainly you can pull that off of our website at americanira.com, or please feel free to give our office a call, and we can supply you with that document. And essentially that document will indicate to us what you're going to be investing in, what the terms of the investment are, so that we can start to understand and compile the necessary paperwork on our end for the investment that you're involved with. So in this situation, the title company will prepare the note and the closing documents showing Jack's IRA as the lender. Certainly in some states it's going to be an attorney that will prepare that document. In other states it will be the title company. But it's very important that we understand that whomever is preparing that document has Jack's IRA as opposed to him personally as the lender on that property. And we can, at the office, we can certainly give you the very specific wording of how that's going to read, but we want to make sure that we're deciphering Jack personally from Jack's IRA. They're two completely separate entities, if you will. So the important thing is that Jack will review and approve all closing documents. An American IRA will wire the funds or perhaps send a check. Usually it's wiring the funds to, in this case, the title company. As we said, we're a completely neutral entity, so the only way that we know that this is the exact investment that you want us sending a specific amount of funds to a specific location, is you're going to see every document that comes through the office, and you're going to sign off on it stating that you've read the document, you approve of the content of it, and you're looking for us to take a specific action. So keep in mind, you're always the captain of the ship. We're just kind of carrying out the tasks on behalf of your retirement account. And the mortgage, in this case, is recorded and held by American IRA. Some states it's a mortgage, and some states it's a deed of trust. But always make sure that if it's going to be secured by a property, that you do have those instruments to secure that. So tax-free or tax-deferred monthly payments are made to Jack's IRA account in the amount of $790. Now, we say tax-free or tax-deferred because some retirement accounts are tax-free and some are tax-deferred. A Roth IRA is what we call a post-tax account, and what that means is that you've already paid taxes on the money before it goes into your retirement account. So the growth of that retirement account is going to be tax-free. As long as you have the account for at least 5 years and you're at least 59 and a half when you start to take money from the account, a distribution, that will be considered tax-free. Tax-deferred is a pre-taxed account. A lot of us are familiar with accounts such as a traditional IRA or 401ks, pension plans. Those are all tax-deferred accounts. We haven't paid taxes on the way in, so when we take money out in our retirement years for living off of and actually, as we said, enjoying that retirement lifestyle, there will be a taxable consequence. So it's important to understand and differentiate the two retirement accounts. As we said, if you have a traditional IRA or a Roth IRA with one institution, it's going to be the same account with us, so we'll just keep it status quo with whatever it is unless you tell us to do different. So the amount is going to be $790. And that is because that is 9.5% of the $100,000 that we lent to that investor. So we'll start to see how these numbers come together here. American IRA records monthly payments, and Jack tracks his payments via his online statements. So what we're taking from that is the money that is being paid to Jack's IRA, that's going to be sent to our office. As we said, we're the record keeper for that asset, and the only way that we're going to be able to do that record keeping is to actually take receipt of those funds as they come in. Jack doesn't want to personally take receipt of it and maybe go and buy a couple fancy dinners for the family. Jack's IRA owns that note, so Jack's IRA needs to get all the proceeds from that note itself. So in 5 years, the loan is repaid, and so let's look at the breakdown of the numbers there. After 5 years, $47,400 of interest payments have been made, and the $100,000 that was initially loaned on the property. So what that means is the 9.5% over the 5 years totaled $47,400 of interest that IRA made on that very simple investment. So certainly that's, I don't know if we call that a home run, but boy, that's solid. That's not the ups and downs. That's not, I'm going to make 20% on my stock portfolio one year and then I'm going to lose 35% the next year. Nice and solid upward trajectory. And I think a lot of us, especially in this very turbulent environment, would be very happy with an investment that yields that kind of a return. Now, we want to make sure we understand the IRA account cannot loan money to what we call a prohibited individual. And a prohibited individual is just simply someone in your lineal family line, including the account holder and their spouse. So, for example, if it's my retirement account, I can't loan money to myself personally, to my wife, to my grandparents, my parents, my children, grandchildren, etc., and their spouses. Those are the people that are considered prohibited for the investments. So it's important we understand that distinction. Now we're just going to go through, that was what we call a private lending example. In this example, a client is going to use their retirement account to actually outright purchase a property. So there's a lot of different ways, even in the real estate world, as we said, that your IRA can actually be involved. So in this example, Steve locates a property that is priced below the current market value. Once again, Steve's finding the property, Steve's doing the diligence on the numbers. His IRA purchases the property for $100,000. Gotta love the $100,000. Always a nice, easy example there. Steve's IRA uses $15,000 to fix up the property. It's important to understand, if the IRA owns 100% of that house, it is 100% responsible for any of the expenses, any of the rehabs, closing costs, etc. That also has to come from the IRA. The IRA owns the property. The IRA has to be able to take care of that asset. The property takes 2 months to sell. So there's going to be holding costs associated with that property. We paid cash for that property, but there's still going to be some little things there. There's going to be the taxes for those few months, the insurance, things of that nature. So that's going to, in this example, cost around $500 for that property. A buyer comes along and purchases the property for $155,000 from Steve's IRA. The proceeds from the sale will go directly back into the IRA. The gains will either be tax-free or tax-deferred. Remember, as we said, depending upon the type of retirement account, whether it's a post-tax account or a pre-tax account, and all of that will go back into Steve's IRA. So the gains are coming back tax-free or tax-deferred. So let's look at the breakdown of this transaction. We threw a couple of different numbers at you. We want to make sure everyone's on the same page here. In terms of the money that has been put into that property by Steve's IRA, there was the initial $100,000. This was to purchase the property. We'll assume that also included the closing costs, just to make it a real easy number. There were carrying costs associated with it. That was $500. And rehab costs of $15,000. So that's a total of $115,000, $500. So into the property, $115,500. At some point in the future, Steve's IRA sold that property for $155,000. And so that means that there's a net proceed, a net profit of $39,500. That's a pretty incredible rate of return. Now, certainly, as we said, we have to be honest in looking at the economy that we live in. Turning a property around in 2 months, you certainly probably need to be really great as a real estate entrepreneur, or maybe possibly there's a little bit of luck involved. Let's say that takes 6 months. Let's say it takes 8 months to sell that property. The reality is the IRA purchased a property well below market value, and it turned the property around, put some money into it to really bring it up to speed, and was able to sell that for a profit. In this case, just a shade under $40,000 in profit in a few months. That's the rate of return on that is off the charts. But we start to understand that a lot of us talk about how there's so many great deals out there now with the foreclosures and the short sales and things of that nature. It is very, very possible these days to purchase a property well below market value, especially if you have cash. And there are still buyers out there. There are those loans out there, especially for those first-time home buyers. And this is a price range in most communities where a first-time home buyer can go in there and purchase a property for something like $155,000. So we want to just give you a little bit of a flavor of what can be done with the different acquisitions. So let's talk for a moment about the prohibited assets. As we said, we gave you a real fun list of some of the things that our clients are currently investing in, but we want to make sure that you understand what you cannot invest in with your IRA or 401k. And certainly feel free to speak with your CPA about this. This is IRS code 4975, which tells us we cannot invest in antiques, wines, rugs, collectibles, and life insurance policies. That is essentially the list of things that your retirement account cannot purchase. Now the good news is, most of the time this isn't an issue. We don't have many individuals that are getting into the antique world, or they're buying the 80-year-old bottle of wine, something of that nature. So this is usually a non-issue, but we want to make sure that we're thorough in our education and you understand there are certain things you cannot invest in with your IRA or 401k. Also, we spoke about disqualified people. We want to make sure that you understand your IRA certainly has rules that it needs to follow when you're purchasing an asset or when you're selling an asset. And as we said, those disqualified people, which is your lineal family line, yourself, meaning the account holder, and spouses, are people that the retirement account cannot do business with. So certainly the IRA cannot purchase an asset from those individuals, cannot sell an asset to those individuals, can't exchange any goods or services. And by that what we mean is, let's say it's a piece of real estate, for example, you are not going to be able to provide the sweat equity to that project. You're not going to be out there swinging the hammer to add value to that IRA and asset. You're going to need to hire out the handymen, the contractors, individuals that are not these prohibited people to do that work on your property. You're always the decision maker. You're always going to hire and fire and make the decisions as to how the project proceeds. But certainly you want to make sure that this is strictly a passive investment for your retirement account. Now, in terms of getting your self-directed account opened, we want to make sure you understand there are a few different ways that you can do this. Certainly, we do have clients that will actually open and create a new retirement account. Let's say perhaps they have a 401k with a current employer, and their current employer will actually not allow them, for whatever reason, to move any portion of that 401k, but they're excited about this world. They want to get started. They want to buy the tax liens or the silver or whatever it may be. They can actually create and contribute to a new retirement account. Now, another way that we can do this is you can actually transfer an existing retirement account. So as we said, if you have, let's say, a traditional IRA with some banking institution, and boy, the CDs at 0.8% just aren't cutting it anymore. You actually want to get something above 3 or 4 or 5%, and you feel good about whatever it may be, then you can actually transfer your traditional IRA to us. It's going to be a traditional IRA with us. It's a transfer process, just an institution-to-institution transfer, just as if it were going from one bank to any other bank. It's a qualified movement, and it's not an issue. We see these every day of the week. So we can transfer an existing retirement account to us. Now, we can also do what's called a direct rollover. And normally when we see a rollover, that's with 401ks and with pension plans. And with those accounts, That's going to be a rollover process, usually into an IRA with us, a pre-taxed, let's say, for example, 401k into a pre-tax traditional IRA. Once again, that is a qualified movement, and a direct rollover is probably the most efficient way to do that, and to make sure that, once again, it's just going from one institution to another. It's nice and clean that way. You're going to get that rollover form from your current custodian after you've opened the account with us, so that we're going to be able to accept those funds. I'm saying this all just so that you hear this for the first time. Please feel free to contact our office. Let us know the types of retirement accounts that you currently have. We'll walk you through that process, and we'll let you know if perhaps there's multiple options, especially if it's a bit more of a time-sensitive investment that you have in mind. So we're here to be of service. We're here to be flexible for you. Just understand, if you have a pension plan or a 401k, you can do a direct rollover with us. There's also what we call an indirect rollover. Certainly, there's a component, an extra component to that, in which your current institution is actually going to send the funds to you as opposed to us, and then it's your responsibility to get that to another institution inside of 60 days. Now, that's not ideal in that we all understand life happens, and if for whatever reason you forget about it, you drop the ball, there's a situation in your family life, and the 60 days comes and goes, that's going to be a full distribution of your total retirement account if you're not able to get that to another institution. We do see that happen a few times a year, and it just breaks our heart because there's nothing we can do about it. So it is technically an option, not necessarily one that we strongly suggest, but you can personally take possession of those funds before you send them to another institution. Now, as I said, our role is to provide the service of being the administrator for your retirement account. We are the record keepers. We understand we're here and we get paid to provide the service of helping you in any way, shape, and form in terms of the record keeping for your retirement account. We have an incredibly knowledgeable staff. The great thing about our office is you call us up at the office, you don't get the press 1, press 2, you get the live body. Sometimes I'll have people ask me for the extension, and it makes me smile because we don't have extensions. We have live bodies. We have real people that you can talk to. So we're here to be of service in any way that we can, whether it's on the front end answering questions about the different types of retirement accounts and the different investments that you can make. Certainly once that account gets open, we have a knowledgeable staff that will be able to direct you as to the paperwork that we need, and certainly you're going to be dealing with your other professionals, your CPAs, your attorneys, etc. But we do everything we can to go above and beyond in providing that level of service to you and making you comfortable with our process, and hopefully we can articulate that as efficiently as humanly possible to you. So in terms of self-directed IRAs, why self-direct? Why not just stay with what you're currently doing? As we said, it's just a matter of personal preference. If you know, you understand, and you're doing well with what you're currently doing, whether it's stocks or whatever it may be, by all means, that's what works for you, and please just carry on. You know, it's the ability to take control of your retirement account. That's so important that we're investing in what we know and what we understand. If we're investing in what someone else knows and understands, A, they really better know their stuff, and B, they better be continuously communicating what they're doing because the world's ever changing. So it's very, very important that we understand what we're investing in. And we certainly believe that you're going to get a better rate of return. You're going to make more money on your money if you're investing in what you believe in. You know, it just makes sense. You do things in life that you know and that you understand. You work in a job that you have skills that you can add value to that company. You should invest your retirement account in assets that you understand and that make sense to you. And the wide range of investment choices, as we said, as long as it's basically not antiques, wines, rugs, and collectibles, there's an endless world of asset classes and things that you can invest in. So it's really exciting. We actually, as employees, love to learn. We love to come to work. We love to delve into the process, and certainly whenever we get to pull our owner aside, Mr. Hitt, for a moment and ask him about a deal and how would you structure this if you were going to be investing your money, so that we become more knowledgeable and effective as employees and and at a higher level of service all the time. We're always continuously educating ourselves. So this is the end of the presentation at American IRA. We certainly appreciate you hanging around with us for 30, 40 minutes, whatever it's been. Certainly feel free to give us a call at the office, as we said, 828-257-4949. Also, my personal email address is Sean, S-E-A-N, at American, AMERICAN.IRA.com. As I said, we're available during normal business hours. We're here to be of service in any way that we can. We'd love to just have a talk with you and see if there's any value that we can add to your self-directed experience. As I said, we'll be rolling out some additional videos. This was our basics, our 101, if you will, taking your IRA and 401k beyond the stock market. Also, our website is www.americanira.com. We're continuously adding new material all the time to that, and please feel free to check that out for events and speaking engagements that we're a part of. We're blessed to be associated with a lot of different sources out there educating the public. So let us know if we can help in any way, and we'll see you soon on another video. Thanks so much.